Guess who? That's right. Teresa Tims, president of TDR Mortgage, serving all of California, specializing in Southern California market with a rate update. How high are those rates anyway? And that's hard for somebody to say, oh yeah, the rates are so high. But there's so many variables that go into it. You know, somebody that's putting 20% down has a 660 credit score versus a 780 credit score. It's probably going to be a point difference in actual rate, you know, like 5% to 6%. So it's a custom type of thing that happens on a case-by-case basis. At TDR Mortgage, we have a pricing engine. In that pricing engine, we have tons of lenders in there. We put in all of your variables and up pops the lenders with the best pricing. And we're approved with literally everybody in town that is, I wanted to say worth a shit, but I thought maybe I shouldn't say that, but whatever, you know what I mean. There are some lenders out there that do that bait thing and they offer these like crazy low rates. And then you get stuck in this chase your tail thing where like 90 days later, all you've done is turn around, submit. You get approved, submit a bunch of stuff. And then another 30 days later, you have to start all over again. Things have expired. So we don't deal with those kind of lenders. We deal with wholesale lenders that are tried, true, reliable, have great rates, have great servicing. We don't mess around up here at TDR Mortgage. All right, so let's get started. I want to just kind of go over the rate sheet with you real fast. And let's see, here it is. Let's pop it up now. All right. A little disclaimer, this is not intended for consumer use or distribution. It is not an offer to lend. It's just for educational purposes only. And being that there are so many different variables, we just had to pick something, right? And normally what we do, if we have like one client, we shop around, give them an idea of, what it is, make sure that one lender isn't, their pricing's, 0.5% higher or whatever. We want to make sure we're in the ballpark. Then when you get your offer accepted, then what we do is go back to the drawing board and we shop all over the place to make sure that we are not missing an opportunity. This particular 18 or 20 scenarios is very, very time consuming, And then the stuff that happened, in the market last week, it was so volatile. We thought we'll give it a break and then start up this week. And so that's what we did. We priced this stuff out on June 22nd and it's right about the same. Rates based on 720 FICO score, 450 loan amount, 995 processing, no discount points. Remember, guys, when you're looking at rates on the internet, the big box lenders, all those pricing things are of the optimal of the optimal. 800 credits or 780 credit score, 40% equity or 60% LTV. Single family residence, owner occupied, 2 or 3 points. And we've really seen some of these big box lenders, unfortunately, showing 3 points. It is not a time to pay points, people. It is not a time. And the reason is because we have a recession on the horizon. And we do because the Fed chairman said so. That's how we know. How soon and when, we don't know that. 9 to 18 months, somewhere in there, maybe 12 to 13 months. But when you have a recessionary time, they come in and to solve the problem, come up with this solution to lower the rates. And it's a historic thing. It happens. How low they're going to go, I don't know. I don't have a crystal ball. All I know is what I follow so many smart people and follow so many different forecasters that I have an idea of what's going to happen. And, I've been in this since 1998. So we've been through a couple of these downturns and they all pretty much happen the same time, much faster than anybody thinks. When the rates go up, they go up, right? This last time that was kind of crazy. That really went up a lot and rapidly. Conversely, in inflationary times, one way to get a hold of the inflation is to raise the interest rates. And things have calmed down after the storm last week. And we just kind of have to do like this wait and see. How much impact are the interest rates going to have on the markets? There's been some small indicators come out that it's working a little bit. I don't know about you though, inflation seems pretty crazy and the supply chain issue is ridiculous. So I don't know how this increase is going to solve that and bring it back down where it needs to be. But then again, I'm not the Fed chairman. I don't set monetary policies. Just loan officer over here, trying to make a living, right? Okay, let's take a look at those rates. Okay, going to the top. FHA, you can see it's in the high 4s, no points. The high balance loans, those are in areas that are over a 647, 200 loan amount, those high cost, LA, Orange County, San Diego. VAs are in the 5s. And they're priced out kind of odd because VAs are usually around FHAs. So if we shop this all over our nation, we'd probably come up with a lower rate. This is just, we couldn't shop. It would have been like a week process to do that. Conventionals, look at the conventionals. They're all kind of hovering in the mid 6s with no points. Look, no points. Then when you get into the high balance, 5.6, 1 point cost. And most people on the high balances, the loan amount is so high, you usually do get a pretty good bang for the buck. I'm only recommending that you do buy downs right now if it pays for itself and 9 to 12 months. Otherwise, we are going to wait for that recession to come, the rates to go down, and you to come out like a rock star with a lower payment. Okay, that is the 75%. Okay, we did 75% because the cash out refis, they like it best there. And on a no cash out refi, 6.3, you're paying a premium. Most of our buyers were putting in HELOCs right now. We are not doing them. I just refer my clients to people that do a good job and we have no affiliation with, and they are fair and honest and move quickly. You don't want to go with some company. That's the first thing you have to ask. A lot of these credit unions taking 90 days, 120 days. Well, that's great while you sit around for 120 days and then the rates go up, or you have to circle back with all kinds of documents. What a huge pain. Don't do it. Always ask how long it's going to take on those HELOCs. The cash out refi, 6.75, you're paying a premium on that. So that's why we're recommending the HELOCs right now. No cash out refi, 4.25. Oh, costs 1 point. That's 15-year. Just kidding. Okay, 15-year. That's why. All right, jumbo. We didn't price all over town for jumbo. I'm sure we can do better in the pricing. And also keep in mind, you know what jumbo loves? Jumbo loves a 75 loan to value, and jumbo loves a 740, 760, and 780 credit score. It does not love a 720 credit score, but I wanted to keep it consistent. In this market, if you are looking to refinance in the future, if you're looking to purchase, the number one thing that you need to do is get your credit in order. Pay down your credit cards. High limit, low balance. High limit, low balance. That just comes out so natural because I said it like so many times in my life now. But that is one of the biggest ways that you can get your credit score higher. Banks, non-QM. I'm just gonna do like a couple non-QMs. Non-QM loves to be around 75% loan to value, but you can go higher. We do owner OC, so like 10%. And the pricing, we're doing one right now that's not too bad. It's 7.25 owner OC for a bank statement loan with just 10% down. So I feel like we are getting a screaming deal from my lady, and we locked her 2 weeks ago. I think we're gonna see this non-QM pricing come down and calm down a little bit because non-QM doesn't fluctuate like regular stuff does. It moves a lot slower. They don't have price changes every day. Like they have price changes every 2 or 3 weeks. And sometimes they don't have price changes for 2 months when things are just kind of moving along, like a Hawaiian breeze, but it's not a Hawaiian breeze right now. So that they're not doing that. So I'm looking for those to kind of come down. 25% bank statement purchase, bank statement, 1099, P&L. These 25% down bank statement programs, people are loving the 40-year interest only product. A lot of savvy people know that, in recessionary times, rates come back down. So I like to be in something. I don't like to take chances. If I can't afford it right now, then I don't want to do it usually, probably. However, the 40-year interest only loan, fixed for 10 years, then it goes to the same rate. So let's say it's at 6.5, fixed for 10 years, interest only. You can make additional payments. You can get an inheritance, pay it down. The payment will go down because it's adjustable. Then at the end of the 10th year, it converts to a 30-year fixed. It's an awesome product. People love it. That's it. Wow. So there are some notes over here about this jumbo costs a point, the non-QM 1.5 points, lender fees are higher, we have to charge processing. I've done these non-QM products though, where I've only charged like 0.625 or 0.725 when loan amounts are really high. I mean, it kind of goes by the way I price my loans is how much work is it going to be? And the non-QM loans, honestly, they are pretty labor intensive. Self-employed people have a lot of things going on, and there's a lot of way for that product to kind of go sideways. You really want to work with somebody that has been doing, that has experience doing them, like me. Shameless self-promotion. Okay, next, let's talk about what's going on in the market. Historically speaking, when rates go up and it affects affordability, demand goes down. It happened in 18 like clockwork when the rates went into the fives. We were clipping along, moving along. 19 or the mid 18 to end of 18, rates went up. Homes had longer days on the market, price reductions, and things just kind of started to stabilize. 19 came in, rates went down, and we were off to the races. And then 2020 happened, and then everybody stayed put. People were staying put. They weren't moving unless they were retiring or going out of state. With that being said, prices started to stabilize and soften, and that is exactly what we're seeing now. History does repeat itself. History repeats itself. And I am just a bringer of information. I have a feeling of how it's going to go down or what's going to happen. But one thing I can tell you is I'm a huge believer in home ownership and the tax advantages and the equity building and the wealth building that happens. It's huge. And right now you have a little window buyer that's been shut out of the market for 2 long years. You've been shut out. There's going to be this sweet little window coming up. Sellers aren't having that come to Jesus moment, because what's been happening the last 2 years, I'll tell you what's been happening. Sellers have been setting the price. When you've got a really sharp agent that knows what they're doing, goes and presents to a listing and says, this is what the price should be, and here's why, and here's why, and here's why. And then you have a seller that's realistic and reasonable. They could go with this agent that is just presenting the facts, has a great track record, or they could go with a guy that says, so the other agent told you 750 and you want to sell for 800. I can get you 800. Let's just list it at 800. And then overpricing things wasn't that big of an issue before, right? Because why? People were paying over like crazy. So it wasn't as big of an issue as it is right now. Pricing is everything moving forward. It's huge. And that's why you're seeing price reductions right now, is because sellers had this 2021 expectation or early 22 expectation that they could do that. So all of that is being weighted through right now. And there are some areas that aren't, I have friends that sell in Los Angeles and Beverly Hills and West LA. They're not having that problem so much because people have so much money and there's still a shortage of inventory. But what I'm going to share with you is going to be kind of interesting here. One of my friends, remember I told you like all these super smart friends. This is Stephen Thomas, and he's on Facebook. You can find him under Stephen Thomas. I don't know if you can see that. Stephen Thomas, Housing Buyers Market 22. So he does this really cool thing. You can follow him on Facebook and get these updates too. March 22 to today, the days on market, look at LA, doubled. Orange, almost tripled. Riverside, tripled, right? San Bernardino, tripled. San Diego, Ventura, 20 to 43 days. So, wow, that's some crazy, interesting stuff. So days on market, what happens is when these start to sit there, the people are going to be like, crap, I can't sell my house at what I thought. And some people are going to be like, I'm just not going to sell. I'm not going to do that move up purchase because I can't get what I want. Rates are higher and they're going to stay. Then there are other people that have to sell. The market is in this really cool state right now. We're entering equilibrium. We've brought more homes on the market. That's awesome. Do you know how awesome that is for buyers not to have to before you could only go out, there was 4 houses that met your criteria and each house had 20 freaking offers and most of them were over. It was so frustrating for so many people. And right now, moving forward, that's going to change. So I think we're going to enter like this like little Goldilocks period for a bit, where it's not too, what is that? It's not too warm. It's not too cold. It's like this nice equilibrium thing. It's called the Goldilocks thing. I haven't got to use that in a long time because we haven't had any Goldilocks anything in a long time. Let me show you this other, before I do that, I want to let you know, my name is Teresa Tims. I'm president of TDR Mortgage. And if you've made it this far, thank you. Please like and subscribe and comment below. I'd really like to know your thoughts, your input, or if you think I've said anything that maybe doesn't make sense and you have questions, I'd really like to know. I want to be a resource for you. I've been doing mortgages since 1998. I'm a purchase originator, although obviously I do refis. But I love working with buyers, and I'm a realtor's lender. So I go out there and hustle to help my buyers get their offers accepted. In the last 2 years, it was not fun. I'm telling you, it was not. And when we got an offer accepted, you would not believe the kind of dancing that we did around here. Okay, I want to show you this other slide that Steven has, and it's at 1610. Let me go there. 1610. This is where we're at in inventory, and we've had some markets have doubled in inventory. It's been pretty shocking. Like, I wouldn't think that we would have come back so quickly, but it's really cool. If you could see these charts down here. Let me see. 2019 is purple. So look at that. We had, 40,000 units, right? And then when we go, what is this? I'm gonna put my dang glasses on right now. Okay, so this is all of 2019, right? January to December. And the green line is 2020, right? We thought we didn't have many listings in 2020. And then here comes freaking 21, and we're like, you've got to be kidding me. And people are like mad crazy to buy a house. In the Inland Empire, Riverside, San Bernardino County, we had like 16 to 20 days on the market. I mean, it would sell in like one day. Those are the times we'd have like 50 or 60 people come through your open house, and everybody had to come at like 15-minute intervals. That was so fun. That was awesome. And here comes 22. Look at 22. We started off with 10,000 units total. And this is Southern California. You can't see it up here. Southern California only. And then look what happened around April, May, when the rates started going up into this is when it started going up into the 4s. And right here is like the 5s. And here's where we were like right as of today. So the last couple of weeks are particularly brutal because we would intake buyers and get them all ready. And it's pretty shocking that the payment difference on let's say a $700,000 house at 3% is the same payment as a $450,000 house at 7%. And those low FICO borrowers are the ones that it got hit with the worst. They did not price out good. That's why you really got to, take care of that credit, get that credit in order. High limit, low balance, high limit, low balance. Okay, so here we are. So this is going to be interesting when I'm wondering, how high do the rates have to go? How high do the rates have to go for it to really cause a downturn? We can afford a pullback. In some areas, we went up 35% in a year or more. That is ridiculous. We needed to get some stability back in the market. And unfortunately, if you hadn't bought before now, for whatever reason, I'm really sorry. I know it was hard. It was so difficult to be a part of watching people's, frustration. And it's almost like you didn't, if you weren't with the right team. We had huge success. We had huge success. What I didn't have success with is just normal people that had saved $20,000 or $30,000. Well, if you're just a normal person, maybe you could go to new construction and get your offer accepted, but it was really hard, even kind of towards the end of mid 21, you're on waiting lists and things like that. Well, now that is not the case. So now, and I know the rates are higher and it's going to be hard, But just remember that owning a home, it's a long-term game. Long-term game. I don't know why that was so hard to say. And, over the long term, 9, 10, 11 years, you're going to have tremendous appreciation. And if you just try to get out of the mindset of all the stuff that's going on out there, talk to a professional, call or text our office at 909-920-3500. Maybe you're looking, you want to buy in a year from now or 6 months from now. I'm telling you, we do it all the time. The really serious, smart people do it in advance, because what happens if you get out there and you find this perfect property and then you're not prepared and you lose it? That would be tragic. I don't want to be part of that. Anyway, I think that's all I have. And moving forward, there's going to be some interesting stuff. This is a definitely unique time in our economy, in the political scene, the supply chain stuff. I think that's probably what concerns, me the most. And I really want to get out there and spread the word. I want to spread the gospel to as many buyers, first-time buyers as I can. We weren't able to do first-time buyer programs either. But you know what? We are now. We are doing them now. I really like the Cal HFA program. It is bar none, premium, creme de la creme. They have the highest income limits. And the problem with a lot of those buyer programs is that, if you want to buy a house in LA, you're looking at minimum five. I sounded weird. Minimum. You're looking at a minimum. I'm like nasally because all this congestion that I have. You're looking at a minimum 575. If you can find anything in LA at that. 650 to 700 is probably more like it for something super entry level. Well, to qualify for that, you can't make under $60,000 or $65,000, and that's a lot of those, buyer programs require that. Okay, I feel like I've said enough. I feel like I've given you all the rates information. If you need assistance, you know what to do. Call or text 909-920-3500. If you're a realtor out there and you're looking to partner with somebody to help your buyers get qualified, specializes in purchases, you better contact me. I'd love to hear from y'all. Have a wonderful day.